anyone has questions about the current focus list that we sent out over the weekend, let me know. You could do it during the broadcast or via email. Since there's quite a few names on there, and there's been a lot of froth in the market as of late, especially among Chinese names. These are names that have gone quite a distance in a short amount of time. And of course, in this kind of market, it's generally better to take profits when you have them, and certainly a number of these names did overextend themselves. So if names and sold into strength, you're probably patting yourself on the back right about now, since the froth seemed to peak 2 days ago. If you look at something like TWLO, which we had mentioned in a couple of reports, that peaked at in the mid to high 60s 2 days ago, and then settled back down. And there's been a few other names that have done this in this kind of environment, where we were just in a fairly strong uptrend since the Brexit lows. The markets are pulling back the last couple days. That is nothing out of the unusual. I think maybe there's a little bit of jitters because of Fed President Dudley was talking about the he's a very hawkish type of governor in terms of the way he sees interest rates. So he's always the guy who's saying, oh yeah, we need to raise rates at the next meeting, or certainly by the end of the year. But it seems like the whole consensus, the general consensus, is to stay dovish. The Fed knows that they can't really do much in terms of rate hikes. Their hands are tied, and it's almost as if Dudley is maybe assigned the position of being the hawk, just to give the Fed some kind of color, because they still have to abide by the reality of the situation, which is that they really don't have any room to hike rates, and it's possible they won't have room out to beyond the foreseeable future. So Fed futures are pricing in the odds of a rate hike at over 50%, I think in early 2017. But of course, that could shift, that could move as we get closer to 2017. I wouldn't be surprised to see those odds get pushed to the middle of 2017, since everything's dynamic and quite organic in terms of the way the market views things. The Fed needs to maintain this stance that they need to be vigilant on the idea, the notion that they need to hike rates once again. But should things continue to stagnate, they might not have any choice but to do as the Europeans and the Japanese have done, and reverse, not only reverse their initial hike, but also go negative. As we've mentioned, these global foreign countries are in a position where they have to push their capital into the tallest standing midget, which is the U.S. market. It's been that way since QE started, and so that accounts nicely for the continued uptrend that we see in this market. All the major averages have firmly hit new highs compared to 2015, where it was very much a sideways market. That's not to say we couldn't get a similar sideways market here, though I tend to suspect that because of where QE stands, it's going to push markets higher. And that uptrend might be a sloppy one, though. I think we're going to get some headwinds, as we've discussed, that are both political and economic, and that could cause the market to have short and sharp corrections, which is why we always advise to keep your stops really tight. I wanted to mention I mentioned TWO earlier because that one got frothy. We had MOMO that had a pocket pivot before its earnings, and then it gapped higher on the earnings announcement, then closed the gap, closing roughly mid-bar, and now it seems like it's consolidating. It's kind of reminiscent of the TWLO pattern that behaved in a very similar way. Both of these are Chinese names. They're both, the size of the companies are roughly similar. TWLO is a little bit larger. There are different spaces, but I would say overall TWLO has a much stronger pattern. But I would keep an eye on MOMO just keep it on your watch list, because if the market, if this 2-day pullback in the markets is done and we start going higher, it could start taking these Chinese names higher once again. But we are keeping a close eye on the situation as it evolves. Other than that, we see silver's pulling back today. Gold seems to also kind of being in a sort of a flat sideways move. It looks like their patterns are constructive nevertheless, so as we've advised, if you're going to take positions in these things, buy them on weakness. And that weakness has come a few times now since their lows last December. And one of the most volatile ETFs I've seen to date is JNUG, J-N-U-G, and that's the they call it the Market Vectors Gold Miners Index, and you can see that the JNUG the price points are massive. I mean, this thing can double, triple, and then correct 50% in a heartbeat. But it tends to correlate very well with silver and gold. So when either of those, and of course silver and gold correlate fairly well with each other, just that silver is a lot more volatile. So if there's anybody very daring out there on the next pullback we see in silver, or if it's more substantial than what we've already seen, the daring may want to decide to take a small position in it. JNUG has had these 40 to 50% corrections. It's done that twice, and then it's off to the races again. But I always find that kind of an interesting play because of the time value in that. And if you look at the longer-term pattern of, say, silver, if you look at the weekly on it, then you will see that it has certainly rounded out its base, and it's in an uptrend. Gold the same. And given the fundamentals of where the world stands, it seems that this sideways pattern on the weekly on silver is going to resolve to the upside at some point. What would be wonderful if we saw one of those layup trades like we did back in 2010 when silver formed a very, very tight base, one of the most constructive formations I think I've seen in silver, and then from there silver itself went up 200%, from about 17 all the way up to 48 and change. Now something like JNUG, which was not trading back then, JNUG, if silver doubled in price, JNUG would probably go up something like 20 or 30 fold. So that would be an interesting situation to be in. But in the meantime, let's see how silver evolves in its pattern. And with that, I will go ahead and turn it over to Gil.
Yeah, I'm wondering if this Dudley guy reminds me of Dudley Do-Right. What was that that cartoon?
Oh yeah,
Dudley
the cartoon guy.
And the Canadian Mountie and Dastardly Dick or something like that. Anyways, what I'm wondering is he came out with these comments yesterday, and the dollar tanked, and you see the UUP, the dollar index here, broke to new lower lows, which I think is interesting. So you got the Fed minutes coming out today. My guess is it's going to be more of the same. I don't think they're going to be intimating towards a rate hike. So I think for the most part, this is all kind of a fake out. But what's also interesting is the dollar is tanking. Gold is holding tight, and so it's coming into a viable position, I think, somewhere between here and the 50-day line on the GLD. And the silver as well is holding in there pretty tight. But maybe test it. If they tested the 50, I'd probably want to be all over them. But it's interesting, you know, bonds are hanging tight, but they're not going anywhere. So it's not like they tanked on Dudley's comments. And then, but you look at, say, like Agnico Eagle Mines. The miners are getting hit today. This thing's down almost a couple of bucks, heading for the 50-day. I'm watching this thing come in. It might be worthwhile looking at this as it comes in on the long side. But you're seeing that one coming in. Let's look at, these are my favorite ones, actually. Silver Wheaton coming in a little bit. But you can see for the most part, these things have remained in pretty decent uptrends. So nothing really terrible there as far as the chart patterns. They're just kind of moving back and forth. But I think the thing you want to do is be buying these on weakness. So looking for some sort of a dovish Fed minutes release today, then you might get some sort of turnaround in these. I think the market in general, excuse me, is just backing and filling a little bit after getting pretty frothy, and that that's a pretty steep rise here. The S&P though over here is just coming out of this consolidation, moved to a new high, and it's sort of pulling in a little bit. So we could. There's a lot of talk about a top because you have Soros is doubling down his bearish bet on the S&P, but what does he really know? Because he certainly hasn't been right so far. And then you have who's the other guy who's all bearish? Gross is bearish, but he's not really betting any money. And you have this Gunlock guy who is bearish, but that's neither
And of course, Faber.
Who's that? Oh, Mark, but he's
The
always
eternal bear.
bearish. He's always bearish. So
I mean, they did a whole report on him and basically showed all his market calls and how wrong they've been since QE started several years ago.
yeah, I think I saw that. And so there's no somebody's Penelope Pit Stop. Yeah, I remember that. I used to watch that cartoon all the time, so I'm probably dating myself, but who cares? In any case, everybody's bearish, so I think that might put some pressure on the market. But you are seeing some cracks, okay? And I'm not going to say that everything is hunky-dory. Sure, we've seen these great, in fact, this was a Bible gap up. We called it live on the webinar last week, and the stock just jacked higher. And that's continuing hard. But look at something like a Salesforce is breaking down. It's all the way down to the 200-day line. So I've talked about this as being, you got to watch these, both ways. It looks like it could be a big pod, and so it's starting to confirm as a pod. I actually shorted this thing yesterday, and it's on the gap down. That was a couple days ago, and it just has continued lower. But now you're down at the 200-day line, undercut this low. That's a cover point on the short term. So there is some sort of bifurcation in the sense that you can play something short. Another one that I was short yesterday on the gap down was Activision, but that's broken and broke the 50-day. It's undercut this low. I don't know, maybe it tries to rally back up. But this might be another one to keep an eye on as a potential late-stage base failure. I mean, it's showing the initial signs of big volume breach of the 20-day line. Now you're underneath the 50-day line. I'd be watching this thing coming up into the 50-day line at 40.04. Looks pretty weak here, and you've had some pretty heavy selling over the last 2 weeks. So there are some things that are starting to pan out or look riper, say, on the short side. And usually what happens is I just look at the setups on the basis of the setups. Okay, I don't really have a bias one way or the other. I'm not bullish on the market. I'm not bearish. I'm just going with what I see in terms of the individual stock setups. So if I start seeing setups that look shortable and I take positions and they work, well, that's starting to tell me something. And if I operate on the basis of the setups that I see, then the market will naturally push me more to the short side. So right now I wouldn't say that I'm more to the short side because some of these names are just hanging out. But you can see like ServiceNow, this is another one. It's kind of a big deep pod-like thing. This could break. And you're starting to get hit a little bit here. You're not holding near-term support levels. Okay, so that's not really what you want to be seeing as these things pull back. Same thing here. So maybe they come in a little bit more. So we'll find out, I think, more when the Fed minutes are released. For all I know, we turn around and just go higher. And I'd be watching, some of these gold names for possible trades on a flip. So, but meanwhile, you had the Weibo has been a very nice. This is probably one of our best performers. This is an NVIDIA. Is it NVIDIA or NVIDIA? I hear people calling it both things. I think it's NVIDIA. NVIDIA sounds kind of stupid, but what do I know? NVIDIA.
I've always heard it as NVIDIA.
I've heard it, yeah, both ways.
But,
Who knows? Anyways, it's what's in a name anyways. I just go by the symbol NVDA. That makes everything a lot simpler because we know how that's pronounced, NVDA. But this is coming in on the Bible gap up. But the other thing here is look at how extended this is. So this thing's been going for a long time. I think we cut the pocket pivot down here closer to like 34, 33, and it's just basically almost doubled since then. So that's looking pretty good, actually. and or has been looking pretty good, and it's extended. So is this going to take off and just launch higher? No, and it's very interesting that I'll get emails and tweets and whatnot from people who are asking me, well, can I buy this here? It's like, can you buy this? I don't know. If you think it's going higher, then I suppose you can, but that's not a guarantee. But what I find is that people, once they see a big move, okay, they think that somehow a stock is entitled to just continue that big move and just keep going. And so, if people see Twilio, and I bought this one down in here, I think on this day, and you get this big 3-day move, 3 days up like that, and I'm just peeling it away at that point. Now it needs to settle down and find another entry point. But everybody gets excited about it. They want to buy it, and I'll get emails, can I buy this here? Can I buy this here? Well, if you want to risk the fact that it might come flying back down to the 10-day line, at which point I would really want to be buying it, then yeah, but it's just an interesting psychological phenomenon that I see in people where they see something move like that and they just got to get in, and without really thinking about the entry point. And I think a lot of times you have to anticipate these moves rather than react to them. So the time to get in, and we talked about this, was you had a Bible gap up down here that didn't hold up, but it was a stalling pocket pivot, and then you held tight along the 10-day the next day as volume dried up. That's a low-risk entry point. So you're going to come in and take a position there, and then you catch this big move. And you make a bunch of money really quickly. And if you're smart, usually 3 sharp days up, you're starting to run out of gas. You can see this thing also get hit right up the peak. Now it's got to settle in, and maybe it builds a flag or something. I don't know. But it's probably, if it's going higher, it's going to build another formation in here. Maybe the 10-day catches up. So I just hang out and wait. My deal is I've just made a bunch of money on names like this, and even Lane, this one, had a pocket pivot last Friday. So on Thursday, this was coming in. You saw the undercut. Here's actually an early buy point on the undercut and rally, and then it turns and goes higher. This one looks okay. I'm still holding this because you just came out of an IPO U-turn formation. That's what it looks like there. That's kind of looks a little too steep, I think. Maybe I can't really make it look any flatter. Maybe if I do that, there you go. That's more like an IPO U-turn formation. If you go back and look at, say, there's actually a bunch of these out there. I don't know if I can remember them all, but you see, here's one in Mobileye, and that had a nice move from there. Went from like 40 or somewhere, yeah, 40 all the way to 60 in just about 2-3 weeks. So that's a powerful move. And Google was the same thing back in 2004. So let's see. I'm looking at Mobileye's pulling in. I think Ford announced today that they're going to build a driverless car, but they bought some other Israeli company, and Mobileye's down a little bit. But you notice how it's pulling into the 50-day line. I don't know if that makes it viable now, but I just brought it up as an example of a U-turn formation that worked. But the other thing to think about with this is that it could also be in quasi-topping land as well. So it's just in this big structure, and if it starts to fail in here, that could be a bad sign for the stock. So let's see. Here's a question for you, Dr. K. It seems that the ECB balance sheet expansion has had the opposite effect on the DAX. What's the, is there a symbol for the DAX, Dr.
DAX is German. DAX is a German market. And what is the German ETF? There's an ETF for the German market, but I haven't looked at the German market in a while.
Yeah.
But sorry, I can't hear you.
I said I don't know what the ETF is either. Anybody else know? But I mean, who cares?
But it doesn't really matter.
So
it doesn't really matter.
Why do I care what the German market does, and the fact that but I'm not sure what you're talking about. The ECB has been expanding their balance sheet. This has been going higher. So today you got a pullback in here. So it looks to me like the more QE has been driving the market higher. So I'm not really sure what that means. But what does that mean about the price of tea in China? To me, it's just kind of pointless. I mean, to me, these are big think concepts that are meaningless in terms of making money. and basically circle jerk type stuff. But if you're into it, I guess, you know, have fun with it. But to me, it's kind of meaningless. I don't really care. Anyways, you don't have anything to say about that, do you, Dr. K?
There's the big picture. You always want to know the big picture, which again, that doesn't really make you money, but if it brings you some comfort, you know, the big picture is that all the banks are printing, and it's the reason why these markets are not down a whole lot more. I mean, they are off. They're all in bear market territory. All these markets, all the global ones, they're off typically between 30% to well beyond 50% from their old peaks, and that's with QE. That is with all the money printing going on, which tells you how dire the situation is. Let alone all the little bubbles that are now becoming big ones. As Jimmy Rogers said in a recent interview, the current bubbles are staggeringly more massive than the 2008 bubble, the bubble in 2008 that caused the great financial crash of that year. And he's right. I mean, you can do your homework and see that the big picture doesn't look good. But part of the big picture is this QE effect that props up the tallest standing midget, which is the U.S. market. And so, you know, we use all kinds of tools to trade this market, especially in this environment. But we also are trend followers, and the overall trend on a QE basis has been to push these markets higher and to create shallow floors. I mean, we saw in 2013 that was the shallowest floor market the S&P's ever had in its trading history, I believe. Where the corrections were only a few percent. I think the worst correction that year was maybe 6.5% or something. So that just created havoc for all sorts of strategies that rely more on volatility and more meaningful corrections. And so you could see, you know, it was a great demonstration of how governmental manipulation can affect markets in such a manufactured manner. And right now, I mean, I guess the question is, well, since QE is so great, are we going to get a repeat of 2013? Well, the market generally doesn't like to repeat. It rhymes, but it doesn't repeat. And I think we're at more tipping points and more headwinds, more critical headwinds now than we were back then. So that's why I said at the beginning of the year, we wrote that expect more volatility this year. And of course, January and February were quite volatile months. And then that was also followed by the Brexit issue in June, and it's not over. There's a lot more headwinds coming our way. So that's why we always advise, you know, great, you've got these nice gains in Chinese stocks, but take your profits, you know, or you've been sitting on some names in this uptrend, but don't expect the market to be super clean and to continue this really tight accelerated uptrend. I mean, it's great that we have it, but you know, you got to keep your eye on the ball in this environment.
Keep your eye on the ball. Okay.
I guess that goes for any market, really. I mean, there's no market where you can't do that, but I would say this one especially, because it's easy to get lazy about things. If you start to see, you know, the pattern on the Nasdaq since Brexit has been pretty much straight up off the bottom.
Yeah.
Which is great, you know, when it does happen, but it's not a common occurrence. So, you know, expect some fireworks.
Let's see. Someone's asking about MELI, Mercado Libre. This is getting some play because of Brazil, or the Olympics in Brazil, rather. So, you know, it's holding tight, but it's drifting in. It's a thin stock. You know, it trades 348,000 shares a day. It is a $160 stock, so, you know, that does help to mitigate some of that. But the reality is that it's just pulling in. Maybe it gets to the 20-day, but, you know, I'm not going to buy it up here. It doesn't look all that tight to me, and it's just slowly drifting down. It looks like you get a bunch of dumb retail money comes in and jacks it to the upside. It breaks out of this big double bottom type pod thing, and for all you know, it's going to fail and head back to the downside. So I'm not going to buy it, so you can buy it if you want. Somebody says, to Chris's point and also to Gil's earlier, buying right in this market is vital. Yeah, it's the key point, you know, and you have to be looking to buy it when the setups are there. So you don't really see much in the way of new setups here. But that's fine, because I just made a bunch of money in names like Tulio and Is the chart ever going to come? There it goes. Twilio, Acacia, LN, and so I'm not really in a big hurry to try and start knocking things out of the park just because I just did. Okay, and usually in this market, if you start knocking things out of the park, well, all that means is that you're starting to get a bit long in the tooth here, and so you don't need to get all excited and start thinking you're going to make a pile of money chasing things that have already run up. But like I was saying earlier, it's really interesting to see how people get excited about something when it starts to move. And they get this into this frame of reference that because they saw it move, now they're comfortable trying to buy whatever pullback it is, when in fact you could be getting your butt into some serious hot water by chasing stuff. So I'm not going to chase things. I'm going to hang loose and let things come to me. I just think that that's a very common failing among investors. You want to slap them silly when you start hearing. Nobody was emailing us like when Twilio was sitting at the 10-day line down here saying, "Oh, should I be buying this here?" No, we don't. You don't get any emails like that. When you get the emails, when it's up here. Where can I buy this? When can I buy this? Is this viable here? Nobody's emailing us asking us if they should be buying, say, the viable gap up or the pocket pivots that occurred earlier or whatever down here. But up here I'll get emails saying, "Can I buy this here now?" Well, that's because you just saw it run up, and now you've got to buy this thing because you're convinced that, oh, it's just going to continue going higher. And I would say to everybody, avoid that tendency. That's a very big weakness in people, just to get excited about things a little bit too late. Anticipate things. Have a little courage in terms of being able to step into stocks when they're setting up. So let's see. Just looking around at my short list here. Sorry everybody, I'm a little busy here. Actually got an alert, just hit on a couple of things. Anyways, where were we? It's called Overconfidence Bias. Thank you for that, Scotty. I think that comes from the book Trade Mindfully, but I would read that book. That's actually Trading Mindfully, I think it's what it's called. And that's a book I think you should read. You guys have to excuse me here. I'm just checking some things out. Okay. Any other questions? Oh, Grub is one people are asking. Well, here's Grub's another one. Okay. I actually caught this one on the Bible gap up close to the 34.35 level, and you get a nice 10% plus move in one day, and then it runs as high as 40 reverses there. Now, now you're interested in buying it. I think that may have been the move short term. Now it's coming in. It may not make it. So my thinking is, let's see what's going on here. Let's check it over. My thinking is it may just come in and fail, so I wouldn't get all excited about it. Or just hang loose. Again, this was the move, so that it doesn't necessarily have a right to just turn and start going higher. It could just blow up.
Yeah, you also have that overhead resistance from last year in
Yeah.
Grub. So when it made that move, it just didn't go any further, and it's now heading back down. And of course, that's part of the issue with viable gap ups. We prefer that they are in new high ground, or after constructive setup. That is more ideal. Of course, in this market environment, sometimes you can take a shot at something like this, which can also work. But if you do, then you should be very quick to to take your profits. When this thing is clearly encountering overhead resistance, you could sell it in that. You could either sell it when it's sideways, going sideways, or certainly as it rolls back over. And you wouldn't wait till the day. You would have been selling it probably a couple days ago, or at least
Yeah.
yesterday at the latest.
See, the things are starting to weaken here, and it may be independent of what the Fed does. I'm looking at a couple of these, like RCL. Let's see, Royal Caribbean.
Yeah, my guess is that as far as the Fed goes, it's just going to say it's the same old song and dance. They got to appear that they are being vigilant about the interest rates, but at the same time they're aware of global uncertainty, and you know, it's just the same broken record over and over again, but using slightly different words each time.
Yeah, exactly. Let's see. Facebook at the 20-day. You know, Facebook is looking a lot like a short to me, so that's kind of what I'm looking at it as right now. So I'm not, doesn't look like it's getting any lift here. It seems to be overowned. And you've got this IRS notice of delinquency or whatever it is. 1 second, please. I think it's a short, and I am short it, just so you know. I thought once it gets below the 10-day line, it didn't really bounce off the 20 line. It's probably going to head for the 50-day. That's my thinking. So I'm not really in here. I really don't think you're looking to buy much here, to tell you the truth. I think you have to be cognizant of the fact that you're seeing a lot of names not really holding up that well, and you've had this sort of bout of, shall we say, frothy action in a number of these IPOs. So, you know, I think that's telling you just cool your heels, chill, and see how things shake out here. But, you know, it looks like you could be coming in a little bit more. So let's take a look at this now. So you're seeing you're through the 10-day line now. You've held it all the way up. So where are you headed to? Maybe where's support here, Dr. K, on the NASDAQ? I don't really see it.
Yeah, I mean, the NASDAQ's coming back to the, well, it's back in below its prior peak.
Yeah, so
I mean, it deserves to correct to some extent because it has come straight up off the bottom since June, and you know, it's also Cisco coming out with earnings disappointed the market, and they're down over 2%, and obviously they have a heavy weighting. So yeah, you know, and I'm looking at the S&P, which has been a little bit more calm. It's been a bit more of a sideways move, and that's now sitting on its 20-day.
yeah.
So, but you know, the QE effect's live and well, and I think what the Fed comes out and says it's probably not going to be any surprise to the markets. At least they know they don't want to rattle things. They want markets to go higher. So I think they're going to say the things that are required for that to happen. And they've certainly done a good job in that since 2009, because if you look at the overall pattern, I mean, this is, by all intents and purposes, the longest bull, one of the longest bulls we've seen. That's all, you know, market manipulated. And yeah, it's basically the central banks versus the tarnished global economy, and wherever that ends up going, or rather not going.
Yeah, I think that, you know, I would not try and interpret what's happening today on the basis of the Fed minutes. I think everybody knows they can't raise rates, but we've known that for a while, and it hasn't kept a number of these stocks from correcting. And as I'm watching these things, they're getting worse. Like Nvidia is coming down. It's just above, let's see, the 6063 is the intraday low of the gap up day. You're seeing names like CRM still coming down, and it's now at the 200-day, but also workday is getting hit. And the thing that you have to keep in mind is that a lot of these patterns look like this, okay? And so, like I was showing you, even with the ATVI, which is like a big late-stage cup with handle, things could be starting to get a little bit failure-prone here. And so you could get into a situation where these are, in fact, short sale situations. So keep an eye on that one. Let's see. So talking about this one, RCL. Actually short this one up here at the 50-day, but thinking of adding to it. Kind of running up into the 50-day. This is what the pattern looks like. It's pretty grim. It's big, ugly head and shoulders. Looks like it could break for the lows if the market gets in trouble, but we'll see what happens here. Look at Mobileye still is not. Whoops. Right at the 50-day. So what's volume looking like on that thing right now, Dr. K?
On Mobileye, we're at minus 20%.
Yeah, so it is sort of drying up in here. So maybe it's going to try and hold. I don't know. We'll see. How about volume levels on the indexes right now?
Let's check. What does
NYSE is up just a hair, or I'm sorry, NYSE is down just a hair. Nasdaq is up 7.83% for this time of the day. So you're kind of, you know, I don't know. It's looking dicey to me. But we'll see. I think we might get something more concerted after the Fed meeting. Let's see. Any other questions here? 20 of the NASDAQ 100 volume is below average, which means what? To me, it doesn't mean a heck of a lot.
What does that mean? 80 are above average? 80
yeah,
of the 100 are above average, and certainly Cisco is contributing.
Then that's telling you that, hey, you might have a problem here. Let's see. I don't know. I'm just going to run through.
I think Cisco's also. Yeah.
Go ahead.
Yeah, Cisco's obviously, you know, it's one of these techs that pull other techs down, and that could be contributing to why the Nasdaq's. I noticed the volume is at 9% over average, and S&P was about 0.5% over average. So yeah, it could just be something to do with that. I wouldn't. I mean, it'll be interesting when the Fed minutes come out to see what the tone of the markets are. I wouldn't be surprised to actually see the markets then stabilize, and then, you know, the S&P certainly has been trying to stabilize over the last few weeks. So you know, unless we see some sort of real negative news out there on the globe, you know, what causes these market corrections? Typically, it's central banks not injecting as much QE into the system as expected. Or if the Fed said something that was upsetting to the markets, or it's a global economic situation like real dire news out of Germany or China, or it's seemingly dire news, and that's happened before and probably will happen again. And those are the main things that pull this market down.
Well, I would just watch this.
Right now, we're not seeing any of that.
Well, you're not seeing anything setting up. That's what concerns me right now. And basically, like I said, I watch what the market's doing in terms of the individual stocks. And if I start to see short sale setups popping up, then the market will naturally push me that way. So, like I'm saying, if I see an API
always
starting,
let your
okay, so
always let your stocks tell you what. I mean, as we've said that many times, I think certainly over the years, always let your stocks tell you what to do, because ultimately you can't guess when the next piece of bad news is going to arise. But it's interesting that the market seems to know ahead of time, just through their price volume action, on what might be coming down the pike.
Yeah, and you see it in the stocks, and so I wouldn't get fixated on what the indexes are going to do before or after the Fed meeting. Yeah, they're looking a little weak right now. Volume is up on the Nasdaq. It's getting hit with distribution. It did yesterday as well. But if I'm starting to see things break down, then I'm going to be naturally leaning towards the short side, and I've got some short positions on, and the market has pushed me that way. So that's basically how I operate. I know a lot of people, they don't like that. They want you to be a can slim trend follower, but I find in this market you're not really in a situation where you're going to get a sustained trend. I know people wish for that, and it's nice to wish.
That hasn't worked in years.
No,
It's,
it hasn't.
unfortunately, that was a great system for the 80s and the 90s.
Yeah.
Um,
Anyways,
but since then, I mean, even 2006, that gave a great window of opportunity in the second half. I think starting in August. But that was not a trend following. I mean, there were some trends. I think that was the last time the market did trend in earnest, and where canceling may have worked. But the pocket pivots were far more effective during that kind of market environment where you're getting in early. So yeah, even then, I would say canceling was still was a bit of a fading strategy.
anyways, so right now I really can't see anything I want to buy. Let's go through my I'm going to go through my pull buy list here. Whoops! Don't start moving on me. Let's look at Apple. Or it's my buy watch list. Okay, that's pulling into the 10 days. Is that buyable? Maybe. We'll find out. Acacia is too far up there. It is holding above the 100 level, which might be a good thing. If you wanted to buy the stock, you would use the 100 level as your stop or the low here. But you're chasing a big move. So to me, I think you got to wait for the 10-day line to catch up, and then maybe I'm interested again. Here's one that was on my buy list, but I just took it off yesterday. That one blew apart after earnings. Let's see. Adobe has been pretty decent here. Let's see if I can get this up here. Fingers are all tangled up. But that got above the 100 level. Now it's failing. So if this breakout fails, that's going to tell you something here. And I will look at this one either way, depending on what I think is happening. So if it's going to fail, then I'd start looking at this as a short. It was a buy coming up to the 100 level on the breakout, and it's also the Livermore century mark rule that you can implement there. But that's not really holding up right now. So what's the volume level on this one, Dr. K?
We're at minus 56%.
Okay. So it's
quite
light, but nobody's buying it, so that's great. It's pulling back on light volume, but nobody's stepping up to buy the thing. So Ambarella has been a good performer on my list, and it was a bottom fishing viable gap up, huge volume, and it just sets up, continues to go higher, but it's had a big run, so maybe it's tired. Let's see, Amazon. Here's a big stock leader. And I think you got to watch all of these big stock NASDAQ leaders, because this has broken the 10-day. Now it's heading for the 20-day. If it flies through the 20-day, the next place is obviously the 50-day moving average, but that could occur during a market correction. And if it topped altogether, well, it is a late stage pattern, and this could be somewhat pod-like. So, there's that potentiality too. So I wouldn't be complacent here. Taking profits, being active in terms of bagging what you have when you get a nice move to the upside in something, I think is paramount to being successful in this market and making consistent money, as I've been able to do this year. So I've just continued to move higher and higher steadily by taking this approach, and it's a little more difficult. It requires a lot more work than just sitting there and being dumb and long, but I think it's one of the ways to optimize. And then the market will naturally push me long or short as I react to the setups that I'm seeing, rather than some sort of macro picture. Okay. How about VRX BGU? How about it? I don't know. Now I think you're like in desperation land. Is that a BGU? That's not really a BGU. So not enough volume yet. I don't even know if the move's big enough, but you're going to buy this thing here? I don't know. I think you're asking for too much, frankly. Let's see. Let's look at Gigamon is another one on my buy watch list. It's breaking down to the 10-day, coming into the 20-day. Maybe that brings it into a lower risk buy position. Maybe. So we shall see. Avago has been doing pretty well, and it's just kind of pulling into the 10-day volumes drying up, so maybe that's looking okay. Biogen we've been talking about, but it didn't have a pocket pivot yesterday. It looked like it was going to, and then it just kind of flopped out, ran out of gas. And then it's holding very tight. This might try to come out, but it's not clear to me yet that it's necessarily going to do that. So I think that if you're buying it here, then I guess the 20-day at 302.07 would be a reasonably tight stuff. That's about 4% lower, but that's hanging in pretty tight. Some of the
Yeah.
biotechs have tried to come back. What were you saying?
No, I was just saying that would be a reasonable sell stop, or you could just say undercut of this flat, very tight pattern that's occurred. This is the kind of setup that we refer to as the Voodoo Setup. So what I liked about this stock is that it had two gap ups, one on strong earnings, and then it had another one a few days later, and then it's just been very tight since then. So it looks like it should resolve to the upside. That's what these patterns tend to do. Of course, if markets were to start into a more significant correction, then I wouldn't be surprised to see this one get pulled down with it.
One second. Here we go. Let's see what happens here. Down 78. I think you're going to break to less than below minus 100 on the Dow. Nasdaq's down 28, down 0.5%. I mean, you could just be getting going here on the downside. I don't know. But like I said, I just made a bunch of money. Just hang out and wait and see how things play out without getting all excited because you just saw a bunch of things move higher. And that's the one thing I would emphasize for everybody that you have something or you saw a couple three stocks go crazy to the upside. Don't get carried away with it. Let's take a look at some others.
Also, the TWLO, what it did the last few days, it was reminiscent of some of these tech stocks in the late 90s, just that kind of price action where you look one moment and then you look again and it's up another 5%, then another 7%. And the difference, of course, being that there were many stocks in the late 90s that reproduced this kind of pattern and then kept going. They didn't stall out here.
True.
Or they'd stall out and then keep going. Whereas this is this is one of the only stocks that have done this this kind of pattern. So this is a perfect example of a stock where you take your profits when you've got them. You don't just assume it's going to be a big home run grand slam hit winner that we saw many years ago.
Yeah, the other thing to keep in mind is that even if it is, you will have other buy points. So in 1999, in the last couple of months, to be up 1,000%, you couldn't just buy stocks and then sit. I had to use intraday buying power and be moving pretty quickly intraday on a number of names on the way up, and that's how I optimize. And I think you can still do the same thing in any trending market. You can take profits and then look to re-enter on setups. You might miss 10% here or there, but I'm not going to really cry over that because you just want to catch the fat part of the move. Like if you sold, say, Twilio at like 62, and then of course you watch it get to a high of 66.40, and you're thinking, oh, why did I sell? But then it comes back in, and it eventually comes back. 58.83 is where we're trading right now, and it's coming in. So let's see if Facebook blows the 123 low.
I also want to make
118. That's my call. Anyway, down to their 118.83, the 50-day. Go ahead, Dr. K. You were saying?
Yeah, on TWLO, you were saying, if a stock really is going to be a grand slam winner, there's going to be multiple buy points, and that's, of course, in an environment where the pocket pivots work brilliantly on buying on strength, because, of course, I went back through my trades of the 90s and looked at, if I had been using pocket pivots, my returns would have been even more dramatically higher, as good as they were. The pocket pivots in that kind of environment really shine because you're still not buying into new highs. You're buying within the base, and you're buying on, it's just not big strength, but you're buying on strength within the base. So, we're not in that environment, but if, of course, markets change and things can change, and maybe shift us into a open window environment where that does occur. So yeah, it's important not to let greed get the best of you, and to book your profits when you have them in this type of market, knowing that this TWLO has a great story. It is the leader in its space. And I wouldn't be surprised if it gets real tight in here, then maybe you have a voodoo kind of pullback, which is viable, or maybe then you get a pocket pivot of some sort at the first sign of strength.
Yeah, somebody's saying that Twilio is a short squeeze, but nobody's short the stock. Short interest is 0% because it hasn't been reported. Are you showing anything over on your end in terms of short interest for Twilio, Dr. K?
Short interest, I'm showing days volume short is 1. So it's
So
1.0, so it's not significant.
no, and I don't think it's a short squeeze. I think institutions have been buying the stock because they basically have to own it, because it is they've realized with the big revenue and the business model and what they do, I think it's an important name to be long for institutions. So they all come piling in and they take their positions. So I don't think you're going to be able to short Twilio, frankly. So anyways, let's see, what else am I looking at here on the short side? I'm just watching a lot of these names. If they start to break, the Facebook, I think possibly is a short here. Watching the Amazon, watching Google. If this starts to break through the 20-day line, then that could be a problem. So if you start to see that, then and I think we talked about this last week, these are concrete signs that the market could be getting into trouble. And so I think that you have to be alert to all this and watch the setup. So basically right now my view is I don't really need to be buying anything new. If I want to try and hold a couple of things, I can do that, but I'm also being pulled to the short side on some of these setups, and I'm getting positive feedback from these. Okay, so like the CRM, that's positive feedback, so it's telling me I'm on the right side of that. On the Activision, that's another one, and I might even look at EA might fail and turn into a short here. Would not surprise me. So any other questions? We're kind of getting to the end of this, and I just don't see anything I want to be buying. Let's see, Silicon Motion. Let's just look around at a couple of others, see what's going on. Yeah, that's holding tight, but that could fail. That's had a pretty big run. So, I mean, or at least correct, significantly. So it's not like you really want to be in there trying to buy a ton of it. So, I'm just looking through my list. I don't see anything that really turns me on. So, "3D Systems." Here you go. You could buy this one. But again, it's just not. It's sort of way down there. Yeah, maybe it'll move up, maybe not. I've actually been playing a couple others like that, and GoPro is good for a trade up to 16, and it's coming in. Another one that was good for a trade was Fitbit, but it hit 16 the other day, and now it's coming in down to the 20-day, so getting hit pretty hard. I like Square, but I think it could just back and fill for a period of time. That's coming in, volumes drawing up reasonably nicely, and that's has some potential, I think, but it's going to depend on what the market does. Now we're minus 82, but remember, I'm thinking that we're going to see the market down over 100. So Fed comes out in 2 hours, so HAR, any day now. Does this it still exists, I'm assuming? Here we go. Yeah, I mean, that's way down there, okay, and it's at the top of the range. Is it going to break out and go higher? I don't know. It's sort of a crapshoot, it seems like to me. So if you like crapshoots, then go for it. But I would be very wary here of thinking you're going to make big money with this thing. It's got a lot of overhead right along this 90 level, and it hasn't been able to get through it yet, and that could just end up being a short right there. So, that's that's my general take on that. So NHTC is a potential short. Let me see. What is this? Natural health trends. Well, I'm not going to short a stock that trades 120,000 shares a day. So it's obvious you have not read anything we've written on the short side, because if you did, you would know that we don't want to short thin stocks. So if you're going to short 100 shares, I guess you could try to, but I don't understand what makes this necessarily a short. It might be if you want to use a 200-day line, but you know, it's a big, ugly-looking sort of head and shoulders. You could assume then that these are the right shoulders, but it is a thin name, so I don't know if you're going to make if you won't get squeezed if it heads back to the upside if the market turns. I'd rather be shorting things that are a lot thicker. So just for myself. So, but if you think you want to make money shorting this, then it might be at the top of a right shoulder. You'd use a 200-day line as a stop, I suppose. So, and that's reasonably close. Okay, what are we doing here? Minus 81 on the Dow. Nasdaq's heading down a little bit more. Now a little over 0.5%. So Fed minutes out in 2 hours, and we'll just see
2
what
hours.
happens. Yeah, but you know, I just got to tell you, I don't see anything that I really want to sink my teeth into right here. And again, I'll just go back. I'm starting to see some short sale setups working, and so I'm being drawn a little bit that way. And if they keep working and I start seeing more, then I'm naturally going to be getting even more short. So, you know, I think that's really what you're looking at right now. So I think it's a cautionary period. If you own some stocks and you've got some nice profit cushions, well, wait for them to pull in, because they could just come right into an area of support like the 50-day or the 20-day, and I'd be watching that. But other than that, I'm not in a big hurry to start buying everything on the planet here. So anyways, that's all I've got. I don't have anything else really to add. I think you should be cautious and watch how things pull back in here. Anything else, Dr. K?
Yeah, no, keep your stops real tight, because as we've said, you know, when the market corrects, it tends to do it in short, sharp bursts to the downside, and you can see that in 2015 plenty of times. And this is only the second day of the pullback, and you know, even regardless of what the Fed says, the markets have a tendency to do what they're going to do by way of what individual stocks are telling you. So this correction may not be done. Maybe we get a third or fourth day of a pullback, and then maybe then it finds the floor.
Yeah.
And that could be, you know, another couple percent away, which means in terms of the stocks you own, especially these more frothy ones, a couple percent pullback in the major averages could easily be an 6 to 8 or 10% pullback in the stocks you own.
Yeah, even more, 12%, so 15%. So, I mean, just ask yourself, we've come way up off the late June post-Brexit lows, okay? And does it need to keep going straight up? So, you know, keep things in check and just keep your perspective and don't get carried away. I think if you lay back on the long side and you've taken some profits and you're up for the year, you may be in a good position to buy a pullback. Otherwise, I don't think you want to get caught buying things in extended positions, getting all excited, and then getting smacked in the face when things come in, as they often do in this market. So I think you're in a position where you could pull back more sharply, maybe undercut this low down here at around 5,100. That's a possibility. So anyways, that's all we got, you guys. I'm not sure we were terribly helpful, other than telling you to cool your heels and lay back and wait for things to set up again, because things have gotten a bit frothy, and I think at best we need to work some of that off, and maybe that means we're going to pull back a little bit further. So just wait for the setups and take the lowest risk entry points possible. All right, that's it. Thanks for showing up. We'll catch you guys next week. Have a great weekend.
So long, everyone.